Okay, as I'd mentioned, well, GDP numbers were out just over about half an hour ago. Dean Maki, he's the chief U.S. economist at Barclays, was 2009's most accurate GDP forecaster, according to Bloomberg data. But today, just a little bit off. He predicted just 5% growth when, in fact, we had the real number at 5.7%. And Dean, what do you think happened here?
Well, we did get a positive surprise. The key thing, though, that I'd emphasize is that we've been looking for a number of months for a very strong turn here in the fourth quarter, and that certainly occurred.
And it's stronger than even what you imagined. Then.
Exactly. We've been well above consensus on this number for a long time. What came through, we got a little more boost from inventories than expected, as well. Final sales was a bit stronger as well. The real surprise in the report was a 13.3% rise in equipment and software spending. That's a very encouraging sign that businesses are starting to spend on goods, and that we think also means that they're quickly going to start spending on employees and raising employment in the months ahead.
How quickly do you think, Dean?
We think we've already seen one positive print in November. We think we'll return to that in January, and the first quarter as a whole will show substantial job growth.
So does that mean then that we'll see that jobless rate come down below 10% pretty quickly?
We think by the second quarter we are dropping below 10%, and by the end of the year we see unemployment at about 9%. So a substantial decline this year.
Okay, so moving on from jobs, though, I just want to get back to GDP, because if I do the math, 5.7% growth, you take out the 3.4% in inventories that added on to the growth, you get 2.3% then with GDP. So what is that? I mean, that's below. I mean, 2.3% is not as big of a number then. Is that real economic growth here?
Well, I think it's important not to dismiss the inventory component. What's happening is production is simply catching up to sales. That gives households a lot of income to spend. That's why we are seeing consumption firming, especially if you strip out autos, which have been subject to some volatility around the Cash for Clunkers program. Non-auto consumer spending was up 2.9% in the fourth quarter. We think that trend will continue towards stronger consumer spending.
Okay, and what about that consumer spending or the personal spending number? I mean, coming in at 2%, but that is below what we saw in the third quarter. So actually the trend is going in the opposite direction.
Yeah, it's important to realize that Cash for Clunkers really boosted car sales in the third quarter. So that put that number higher than the real trend is. We saw some backtracking on auto sales in the fourth quarter, but that really wasn't unexpected. We think the better measure of the trend is the non-auto consumer spending number. That was up 2.9%. That's a pretty encouraging number.
Okay, and Dean, just before I leave you, I was reading through the press release and the time that I had, the breaks that I had. Personal savings rate, nobody's really talked about that, but it just ticked up a little bit higher at 4.6%. We had 4.5% in the prior quarter. Is there anything to make out of that?
Well, the personal saving rate has risen significantly in response to the household wealth declines of the past few years. We think that it's not going to rise sharply from current levels. It may drift up a little bit from here, but it's not going to be a major weight on the economy going forward. Most of the adjustment by consumers to this lower wealth level has already occurred.
Okay. All right, Dean. Great to talk with you. Thanks so much for joining us. That was Dean Maki, chief U.S. economist at Barclays, and again, the most accurate forecaster in 2009, according to the Bloomberg. Okay.